$300 trillion. That number is so large it almost stops making sense. If you tried to count to 1 trillion, one number per second, it would take over 31,000 years. Now imagine doing that 300 times. That's roughly the amount of debt the world has created, $300 trillion. More than 3 times the entire global economy. More debt than the total value of everything humans produce in a year. At first glance, it sounds impossible. How could the world owe more money than actually exists? Who does the world owe? Who collects it? And the most important question of all, what happens if the system that created this debt can never stop creating more of it? Hey, because here's the uncomfortable truth most people never hear. Global debt isn't an accident. It isn't a temporary crisis, and it isn't a mistake governments are trying to fix. In many ways, global debt is the system itself. To understand how we reach $300 trillion, we have to go back centuries to the moment humanity discovered one of the most powerful ideas ever created. The idea that money could be created from the future. For most of human history, money was simple, gold, silver, coins made of metal that actually held value. If a kingdom had more gold, it had more money. If it didn't, it couldn't spend. That limitation kept governments, kings, and empires restrained. You could only spend what you physically had. But everything changed when banks discovered something revolutionary. They didn't actually need all the gold they claimed to hold. Because most people never withdrew their money at the same time. So banks began lending out more money than they physically possessed. At first it was small. A merchant deposits 100 gold coins. The bank keeps those coins safe, but quietly lends out 80 of them to someone else. Then that borrower spends the money, and that money gets deposited again in another bank, which then lends most of it out again, and again, and again. Like a ripple expanding across water, the original 100 coins slowly transform into hundreds of coins worth of loans. Money was no longer just metal. It had become something new: credit. A promise about the future. And that idea, simple as it seems, would eventually reshape the entire global economy. Because once money could be created through credit, the amount of money in the world was no longer limited by gold. It was limited only by how much debt people were willing to take on. By the 20th century, this idea had grown into the backbone of the modern financial system. Banks weren't just storing money anymore. They were creating it. When a bank approves a loan for a house, a car, or a business, it doesn't pull that money from a vault. In most cases, it simply creates new money digitally. A number appears in an account, and that number becomes real spending power. Suddenly, the system had something extraordinary: the ability to expand almost endlessly. Governments realized this quickly. Wars became easier to finance. Infrastructure could be built faster. Economic growth could be accelerated. Instead of waiting decades to accumulate wealth, nations could borrow from the future. Debt became a tool, a powerful one. After World War II, this system exploded in scale. Countries rebuilt their economies using borrowed money. Companies expanded with cheap credit. Families bought homes using mortgages that would take 30 years to repay. Debt quietly became the fuel of modern prosperity, and for decades it seemed to work perfectly. Economies grew, living standards improved, technology advanced, but beneath the surface, something else was growing too, faster than anything else: global debt. The major turning point. The real turning point arrived in 1971, a moment most people have never heard about. For decades, the world operated under a system where the US dollar was tied to gold. If other countries held dollars, they could theoretically exchange them for gold reserves. But by the late 1960s, something was wrong. The United States had printed far more dollars than it had gold. Too much spending, too many global commitments, too much debt. Then in August 1971, the US government made a decision that quietly changed the financial system forever. They stopped linking the dollar to gold. Just like that. Money was no longer backed by anything physical, not gold, not silver, not commodities. From that moment forward, money became something entirely different. Fiat currency, money backed only by trust. And once that final restraint disappeared, debt entered a new era. Without the gold limit, governments could borrow more. Banks could lend more. Central banks could create money faster than ever before. The financial system suddenly had almost no ceiling. Global debt didn't just rise, it accelerated. Through the 1980s, the 1990s, the early 2000s, debt kept expanding faster than the global economy itself, and few people noticed. Because as long as growth continued, the system appeared stable. Then came the financial crises, moments when the hidden risks inside the debt system suddenly became visible. In 2008, the world watched one of the largest financial collapses in history unfold. Banks had issued enormous amounts of housing loans, many to people who couldn't realistically repay them. These mortgages were bundled together into complex financial products and sold around the world. At first, the machine seemed unstoppable. Housing prices kept rising, banks kept lending, investors kept buying, until suddenly, the loans started failing. Mortgage defaults triggered panic. Financial institutions began collapsing. Credit markets froze. And within months, the global financial system was on the edge of total breakdown. The response from governments was unprecedented. Central banks created trillions of dollars. Interest rates were pushed to near zero. Financial institutions were rescued. The goal was simple: prevent the system from collapsing. And it worked. The crisis ended. Markets stabilized. But something important had happened. Instead of reducing debt, the solution to the crisis had been more debt. Governments borrowed trillions to stabilize economies. Central banks expanded their balance sheets dramatically. And global debt surged to levels never seen before. By the 2010, the number had crossed $200 trillion, and it kept climbing. Modern challenges. Today, global debt has passed $300 trillion. Governments owe massive amounts. Corporations owe trillions. Households carry mortgages, credit cards, student loans, and personal debt. Nearly every part of the global economy now depends on borrowing. And this creates a strange paradox. The system requires debt to grow. But too much debt can destabilize the system. If borrowing slows down, economic growth slows. If borrowing accelerates too fast, financial bubbles appear. Central banks are constantly balancing between these two extremes. Too little credit, and the economy stalls. Too much credit, and crises emerge. But there's an even deeper problem. Debt requires interest, and interest means tomorrow must produce more money than today, which means economies must keep expanding, year after year, decade after decade. If growth slows significantly, the burden of debt becomes harder to carry. This is why financial crises often follow long periods of rapid borrowing, because eventually, the future struggles to keep up with the promises made about it. And that brings us to the most uncomfortable question of all. Can the system ever stop expanding debt? $300 trillion. A number so large it barely fits inside human imagination. But the real story isn't the number itself. It's the mechanism behind it. The modern financial system doesn't simply allow debt. It depends on it. Debt funds businesses. Debt builds cities. Debt finances governments. Debt drives economic growth. Without credit, modern economies would slow dramatically. But with credit, they accumulate obligations to the future. Promises that tomorrow's productivity will repay today's spending, and as long as that future keeps growing, the system works. But if growth slows, if confidence breaks, if borrowing stops expanding, the structure begins to shake, which is why global debt rarely shrinks. It usually grows, because reducing it would require something incredibly difficult: less spending, less growth, less expansion. And that's something modern economies rarely accept. So the system continues forward, creating credit, expanding debt, rolling obligations into the future, again and again and again. $300 trillion may sound like the peak, but history suggests something else. In the world of modern finance, debt doesn't simply disappear. It evolves, it restructures, it grows. Which means the real question may not be how the world reached $300 trillion. The real question might be something far more unsettling. How much higher can it go before the future finally pushes back? If this video changed the way you think about money and the global economy, take a second to support the channel. Subscribe for more deep financial documentaries that reveal the hidden systems shaping our world. Like the video so it reaches more curious minds, and share your thoughts in the comments below. Do you think the global debt system can continue forever, or is a major turning point inevitable? Your perspective might be part of the bigger conversation. Again, thank you for watching, and I hope you have an amazing day.